afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 17th of August and we have Tina Teng, Markets Analyst at CMC Markets, as our guest today, coming to us out of Auckland, New Zealand. As always, Tina, great to have you on the show.
Hi, Brian.
Now, Tina, for a start, US stocks have fallen for the second straight day after the Fed's minutes showed more rate hikes could be on the horizon, particularly if inflation is sticky. Now, what's your view on this, and how should we look at inflation then through the lens of then an Asian investor?
So right now, the Fed hawkish stance sent the bond yields up, especially the US 10-year bond yields jumped to a 15-year high. I think bond getters are major issues for the equity markets that just downgrade the equity valuation. And also there's spark concerns if the Fed continue to hike interest rates, that could cause further economic slowdown. Even though the recent data show that U.S. economy could be still resilient, however, that if the interest rate goes too high, will be weight on the sentiment and also weight on mortgage rate, loan application, everything. I think that's just the macro headwinds now to see a pullback in equity markets across globally.
Okay, so speaking of macro headwinds, then we just had data out of Australia, and the data is not great. Australia's unemployment rose to 3.7% in July from 3.5% in June, and higher than expected by economists, which generally came in with a consensus of 3.6%. Is this a sign then that perhaps the Australian labor market is really starting to cool, and the inflation and the rate hikes have started to impact the real economy?
Well, 3.7% employment rate is still close to historical low. However, the signs of a loosening labor markets. And from the RBA mini minutes yesterday, that showed the RBA could already pick its rate hikes. And it just expressed economic concerns and other aspects of the economic concerns. I think just right now, the labor data could promote RBA to stop its hiking cycle. That's why we see Australian dollars has gone down, and also that's because there's a strengthened US dollar just due to the jumping bond yields in the US.
Now, finally, Tina, we've had a lot of negative data out of China despite different moves on stimulus. This has obviously impacted oil demand, and we basically have oil softening despite production cuts as well. What's your view on oil markets moving forward?
So at the moment, the broad sentiment soared across the globe, and especially the data from China showed weakness. China is the biggest buyer of crude oil. That's why we see oil markets retreated from a multi-week rally as well. From the production side, yes, OPEC further cuts its output as well as Russia. However, at the same time, the U.S. oil producer could actually ramp up their production just to fight market share. So that's a story about the balance between supply and demand. But in general, right now, we see actually traders take it as a negative impact from China. So oil markets now is in this, I think that's a correction phase.
As always, Tina, thank you very much for your insights. Thanks for coming on the show.
Thank you, Brian.
Now, we've been speaking to Tina Teng, Markets Analyst at CMC Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.